Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be going over the candle-by-candle psychology on the S&P 500 and taking a look at what's going on from the perspective of the buyers and sellers. What are they trying to do? What are their objectives? Where's the market trying to go, etc. And starting out of the gates here, we have, if we zoom out a little bit, kind of an inside gap to the upside. If we look at the day prior, there was obviously an immense amount of bearish pressure, and one thing that immediately stands out here is the fact that we're opening up directly on top of where these sellers came in the first time around. We're now coming back. So the fact that we opened up right on top of that, tested it as resistance, and rejected back down with a strong bear bar, realistically, it makes sense that sellers are coming in with a bit of emphasis. Now, not so sure necessarily if they're going to be able to keep pushing it. It is only the first candle after all. But if there are going to be sellers underneath it, like we've talked about several times, when there's a first candle trigger, they're usually going to be going for a 2-to-1, 3-to-1, something a little bit bigger. So if it is going to work out to the downside, then realistically downside objectives have to be out at 44.5275, if not potentially even a little bit further. Now going into the next candle, there we go, we trigger in below the bear bar after rotating all the way back up, testing the open of the day and then cycling down. It didn't really accomplish a whole lot in terms of how far down it went, but it did accomplish a lot in terms of the bullish failure, or the bears at least demonstrating pressure. The market at one point, this was a strong bull bar all the way up here. And then it ended up closing like that. So, given that it did trigger the bears in underneath the low, and it closed underneath their entry point with such a strong rejection at the top, it's realistic that sellers are trying to get going. But remember, we don't have a pure context until we've got a good, 3 candles or so as that extra proof. And we get the third candle, which, isn't the best thing in the world, but at least it did close underneath the bear's entry point, and it's, again, demonstrating a little bit of resistance with the market pulling higher, failing lower. It's not really showing a whole lot in terms of momentum down, but that could just be because of the gap fill. If the sellers are going to run out of steam here from a scalper's perspective, just making sure that we're open to all sides, we should at least see a pulse down to the 65 quarters before it starts having difficulty. There's the continuation to the downside. We have 4 bear bars back to back now. We're through the scalper's objective, so now we can bump back out to a 2-to-1 and look for the continuation lower. There's no candle gapping or anything like that, so this move down is kind of concerning. It makes me question, how strong this actually is. We'll have to wait and see, but at the moment we have 4 straight bear bars back to back, and this most recent one is closing on its lows. We have to give the benefit of the doubt to the sellers, and it's likely that if sellers haven't gotten in yet, this continuation down will get them in with their initial risks likely above the high. Again, this is a wide stop, so we're probably looking more along the lines of scalpers. Either way, we still do have a bit of downside objectives that still fit, and even if they did want to widen out to a 2-to-1, it does fit inside the lows. Got a little bit going for them. We continue a little bit further down, breaking down further. Still no candle gapping, notably, but pretty sizable drop to the downside. And now we have our 5th bear bar, back to back to back, driving down. Very aggressive movement. If we look at it from a volume profile perspective, from the left to the right at the current candle, we are leaving behind the POC, which is way up at the top, 44.7350. And realistically, until that POC changes, we're probably going to be within this cycle to the downside, and we've got, some open targets that are still looking, they're looking even better now. More continuation down, more bearishness, and now this one's a little bit different. This is something that has not happened yet until now. Candle gapping. We have candle gapping to the downside, which is suggesting that the bears do have a bit of momentum, not necessarily just down to the 2-to-1 target here, but also a little bit further to the candle gap objective, hovering right around the 49.75 area. And that's the first time that the bears have actually opened up and shown that they want to try to push this market down. Now they have to show up to the party and really prove it. But even if we do back up, now that we've got some gapping, sellers will begin selling above these previous bear bars. They've got a bit of emphasis. We get a slide through, we take out the objective, and more importantly, we also fill the candle gap objective. So that does take care of a lot of things to the downside, but look, 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 we also have another candle gap inside of here. So if we measure out where that candle gap projects down to, that tells us that we should have downside objectives if the market wants to slide further. That should be poised for a move down to 42.25. Sellers in the bigger picture, the ones who sold a little bit later, are obviously still looking for their downside objectives. We're running into candle gap objectives from earlier, this first one here, and that's causing the market to stall out. But I mean, let's take this into realistic terms here. We've got 1, 2, 3, 4, 5, 6, 7 bear bars back to back. Any pop above a previous bear bar is likely going to get sold, and any pop above a secondary bear bar is very likely going to get sold. Effectively, the sellers are going to sell everything they can get their hands on with this kind of momentum to the downside. One thing that does stand out, maybe we have a small little trap below that previous swing, but if that's the case, we should see a two-step kind of move where it bounces back up with a higher low continuation kind of move. We do get the bull move back to the upside. Notice it comes above the previous bear bar's high. That's where a lot of sellers will begin stacking back in again and looking for a continuation lower. It still fits the target down there, and that's a 3-to-1, but we could also be looking at this from a scalper's perspective, which may have even hit inside of that candle, but to the downside, which we for sure have completed here. So let's widen this out, see if they can get a 3-to-1. All of those targets are measured out in the roundabout the same spot, although yeah, this 44, 42 area might cause some problems knowing that that's the secondary candle gap. We've got bears which are failing to kind of get through. Now we've got that maybe higher low transitional phase. If the bulls are going to come in, it's not, I mean, with this much bearishness, we're probably going to get a second leg. But if the bulls are going to come in, they've got to at least make sure that it fits a 2-to-1. This fits a 3-to-1 to the upside. The probability is really bad. They're probably going to be in the line of around 30% likelihood of success. A lot of traders aren't expecting this to work every time, but when it does, it's usually worthwhile, even if they were looking at that candle in and of itself. So if the bulls do trigger above that most recent bull bar, they will be looking for upside movement, maybe 3-to-1s. But the bear side still has the context, given the fact that we still have open candle gapping to the downside. Yes, the candle gapping did narrow in a little bit, so we have to remeasure it just a little bit. But aside from that, that only moves it up to there. We still have downward potential that is still open. And as long as that's the case, these bulls are just fighting against a raging torrent against them while they're trying to swim upstream. Got another rejection above the highs, bull trap, big bear bar back to the downside. Sellers may even choose to try to get that to scalp to the downside, and likely that's where we get that flush to really kind of finish some of these objectives. Hopefully reach out and finish these off. But again, we've got to be careful. If we find too much support in these 43s, that could be a kind of a sign of we might want to jump ship. Big bull bar back up. This is the chance for the bulls to take it. If the bulls can cycle back above the bears and fill in some of these gaps, it's likely that they reverse, but it's still very early. We're still making new lows. We're making lower highs. We still have candle gap objectives to the downside. Everything is still open. It doesn't look like this is done necessarily yet, and the last time the bulls tried was a trap. This time around, it looks like it's the same thing. With bulls try to come in, they fail. We have a bear bar back down. Not the strongest of bear bars, but very similar to the last time, and I don't think the bulls are going to hang around this time to see what happens. And we end up getting the flush to the downside. So we are through the larger candle gap objective. They do still have wider targets that are just a bit further down. Let's see if they can grab those, but we are through a major target area. If it reverses too much, traders are going to start jumping ship. We get a bull bar. It comes really, really close to those targets, and it's just closing above. That's not necessarily enough to make them too nervous as far as trailing targets go, but this would be an area where a lot of traders may just say, you know what, I'm not going to deal with it. Good enough. We do get a little bit of a pulse to the upside with those traders saying good enough. Another dip back to the downside. Would they get one tick closer? Didn't quite hit it yet. Another bear bar down. There they go. They got it to the tick on that last one. Now, it's only one of them. It's not both of the targets, but at least they hit one. And now they're starting to reverse away going into the 11 o'clock time frame. So a really big objective to the downside that has already been triggered, they might not be able to come back after that. And too many signs of failure from the sellers, yeah, and you can just see them running away. So a really, really interesting morning where the market started off just gas pedal to the floor and didn't stop. It stopped for a minute to trap a bunch of bulls before rolling back over again. And the big thing here is making sure that you're paying attention to the overall context. There's bear candle gapping open to the downside. Why try to fight against that? Wait for that to finish off. Get the objectives out of the way, and then you'll have a much easier time, or maybe a little bit a simpler a simpler time. That's a better word to use. Hopefully you found this one useful, interesting, and of course, if you have any questions or anything like that, you can drop those in the comments below, or a more detailed question, jhb@ssftg.com is the email. Have a great one. We'll talk to you on the next. Thanks.